Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you live a better life right now. And now your host, Marco Salinas.
Welcome back to Business Innovators Radio, where we bring you the brightest minds in the business world. I am your host, Marco Salinas, and today we have a true industry trailblazer joining us today, Mr. Mike Jarman, the driving force behind TurboPass USA, along with his very, very talented team. In this episode, Mike will share his insights, his experiences, and his innovative strategies that have led to the remarkable success of TurboPass USA. So get ready to be inspired as we dive into the world of business innovation with our special guest, Mike Jarman. Before I officially introduce you though, Mike, I'm just going to give your short and sweet, humble bio here. You are a 32-year automotive finance and technology veteran, former VP at Regions Bank Dealer Services, and early sales team at both Capital One Auto Finance as well as Santander Consumer USA. Mike, welcome to the program.
Well, thank you, Marco. Appreciate that introduction. It's great. Great to be here.
Absolutely. So like I just mentioned, my goal today is to pull out information about your background and where you've been and where you started. We know a decent amount of where you are today, but what I like to ask questions about is what led to this point? What got you to where you're at? Because a lot of times people just see all the great rewards at the end of the process. They don't have a clue what the person went through to get there, right? And 32 years is a long time, my friend. You've put in some time, you've put in some real work into this industry. So my very first question for you is I really want to go right back to the very beginning of that process. Can you take us to the beginning of your career? And even more so than that, Mike, can you tell us a little bit about maybe even your, let's call it the pre-career, right? Because I'm going to give I'm going to pull back the curtain here just a little bit. I happen to know this about you, that you also grew up in that environment. You were fortunate that your father was also in the automotive industry. And so you had a, let's call it the passenger seat viewpoint there as your dad was driving. Yeah. You were able to see a lot and you were able to learn a lot. So I want to go back to the beginning of the career, but let's make sure that we emphasize. Tell me first, though, about right before everything that happened before the career started. What did you see? What did you experience watching your dad in the automotive industry before you tell us about the beginning of your career?
Sure. I think it's appropriate to mention that, my brother and I know you know Ken, he's my partner in this business. We grew up for at least for me, 10 years and 7 years for Ken in Latin America. And we lived in San Juan, Puerto Rico. We lived in Mexico City. I lived in Venezuela when I was only, I think, 2 years old, and really following my dad's career with first at Hertz International, Hertz Car Rental, and then with National Car Rental. He was a city manager in San Juan for when I was born. In fact, I was born in San Juan. My dad married his high school sweetheart, Cuban immigrant, Ana Maria from Cuba. She was in exile as a 15-year-old. She came 1959. And so, yeah, I always sort of had this self-awareness that I had a unique upbringing and a unique background, having grown up sort of overseas, right? And probably, having Spanish really being my first language. But when I remember the second time we came back through in Puerto Rico, there's a picture of myself and my little brother, at my dad's big desk at the National Car Rental office in Isla Verde by the airport. So I think they tell me that I said this, or that I asked, Dad, when I grow up, in Spanish, I said something like, am I going to be the boss here too? So it was, we always knew that Dad was in that business, and it had a lot to do with cars. And I've always loved, obviously, transportation and cars. So I was recognizing the Ford Mustang in 1968 when I was like 1 year old. That was one of my first words, I guess they tell me I said, was, Mustang or whatever. So I would point out all the Mustangs in Puerto Rico and Mexico City, and that we lived in Miami where my brother was born. So yeah, later on, as we moved to Texas and I finished high school, my dad started a finance company in Miami, and I moved to help him get that established. And I was sort of taking a break from college, and so he introduced me to the real world in that form of, really, at first he had a little car lot, and really got a chance to feel all the pain and experiences of a small car dealer. He was a buy here, pay here dealer, and so with the help of an old friend, an old Haitian friend of my dad's. He also grew up all over Latin America, but he got a little investment and had this idea to start a finance company there in Florida, in Miami, to help all the buy here, pay here dealers get a little bit of a cash advance, basically on the receivable that the dealers were creating. Because every time, if you're in the buy here, pay here industry, you think that you're making money when you sell a car, but that actually is wrong. You're actually going cash flow negative every time, right? If you buy $1,000 car, you sell it for $3,000, right? But somebody comes in and says they only want to give you $500 down and $50 a week. Now you're going negative cash flow, right? Every time, right. $500 each time. And so the idea for that company was really a formula that my dad came up with, that he would advance the dealer essentially 50% of the amount, the receivable, right? So if you sold the car for $3,000, he would advance up to $1,500. $1,500.
Yep.
Not to exceed rough black book value. So we would have a little discipline there. But now every time a car dealer would sell a car, he would get the $500 from his customer, and maybe he gets $800, $900, $1,000 from the finance company.
Yeah.
Right. And now he's got a little positive cash flow.
Yeah.
And another asset that our finance company was called ESA Auto Finance. I'll tell you quickly what all that means.
Yes, please.
In a moment. But the dealer would now have a little bit of cash flow to go out and buy another car.
Yeah.
And so that's the idea. that was the idea. And so he studied. He was a little bit of a compliance nerd, which is what my brother sort of became eventually, around all the legal work, the legal
nitty-gritty, let's call it.
Yeah, exactly. The framework that the state of Florida established for that type of a transaction, which is a retail installment sale, right? It's not a car loan. It's actually a sale. It's a finance sale. And the dealer is the first lender, right? So this is actually a key understanding, or a key takeaway of both my brother and I's background, of how TurboPass is sort of unique in the market, right?
Yeah.
Where we're extremely familiar with this retail installment contract sale and everything that governs it. So, but ESA Auto Finance stood for equity, stability, and ability, which are sort of these three pillars that my dad learned early on. He was an old F&I trainer too in Texas when he moved to the States. So in order to underwrite any credit decision as a buyer of the loan or the retail contract, you're looking to see the customer has equity, how much money down they have, their stability in their job or their residence, right?
Yes.
And then ability to pay, obviously the income, right? So ESA, yep. Then the joke we had was that our customers didn't have any of those qualities. They didn't have any equity or stability or ability. But we really bought any deal that the dealer decided to roll.
Yes.
We bought the paper, primarily because in the fine print of the contract there, it says that if anything goes wrong, if we have to repo the car, we would deliver the car back to the dealer, and we would recover our unearned, our our unrealized advance that we had given on the loan. So it's called a full recourse relationship that we had with the dealer.
I see.
So the risk for ESSA was to only do business with a dealer on 2 or 3 contracts and then never do another one. And then, of course, all 3 of them go bad. And we have no collection block, we would call it, to take our advance back if we had to repo the car.
Sure.
So needless to say, this was a massive learning experience at 20 years old. Eventually, my brother, who was like a junior, senior in high school, came along and helped us with some things like repos and just running around the business and the lot. So that's like the beginning of kind of just being around this type of a transaction for our whole lives.
Absolutely. So you yourself, first of all, absolutely incredible story. I know your brother pretty well, and I did not know, the details of that. That is just, I mean, I'm wondering if your dad was one of the pioneers of that whole entire concept in the U.S.
Well, I think he was absolutely very early in this in the industry. I think he ran across somebody that was doing these types of loans in Florida, but to give you an idea of how rare this sort of setup was, we had a state of Florida regulator from the finance or the comptroller's office or whatever came into our finance office at one point wanting to do an examination and say, hey, there's complaints, or we think that you're charging too much interest, right? There's laws, usury laws on personal loans, and you can't charge more than 19% or 20% in Florida for loans. And we were like, well, we're not making a loan. And I'm like, what do you mean? Well, let me explain to you. There's this thing called a retail installment sale, and a car dealer who's doing financing can charge in the state of Florida up to, I think it was 15% add-on, which ends up being like 26% APR, and it's perfectly legal. And then the dealer just assigns the paper to ESSA Auto Finance, and we are what's called a holder in due course. And this is exactly the type of transaction that happens today when you buy a car at the Toyota dealer. Guess what? ABC Toyota doesn't keep that paper, right? What they actually do is they auction off that paper in a sense to their lender base. They have relationships, kind of wholesale relationships with 50 banks, right? And captive finance company like Toyota Financial. And still to this day in Texas and most states, they follow the consumer finance laws of each state that govern retail installment sales, or RICs, RICs, right?
Yep.
So my dad was educating a regulator in Florida in 1988, 1989.
Uncharted territory for that regulator, basically.
And he was like, hey, sorry to bother you. It sounds like you got a good thing going here. And the eventual sort of wrap of that business was my dad's investor friends. They had a relationship with Miami National Bank, and eventually the portfolio got big enough that it was interesting for us to borrow against the that portfolio with Miami National Bank. And so there was an asset sale eventually, but we learned a lot. And I had only given my dad a 1-year commitment to help him get the business up off the ground. And sure enough, really at that 12-month deadline, I said, hey, Pops, I think I want to go back to Austin and finish school, and I'd started dating my now wife, and I had ended up following her to the University of Texas there at UT. And after I got a degree, international business degree at St. Edward's University there in Austin, there was a new, I'd say, kind of a renaissance or sort of the beginning of this new industry around auto finance in what's called the subprime. They call it subprime auto. And there was a few companies, I would call them trailblazers or leaders, but these are all former consumer finance guys like General Finance and these guys. There was a company out of Chicago called Mercury Finance, MFC, and they went public, I think, in 1990, 91. Right out of college, they recruited me because they went public, and they had 300 branches or something, and they had to create this sort of accelerated training program for branch managers. And so I was in that program with MFC before they sort of they blew up. I mean, the management there was not very savory characters, let's say. But both my brother and I, by this time in the early 90s, my brother had moved back to Texas, and he also worked for Mercury early on. And then the next company that was pretty influential was Reliance Acceptance Corporation, RAC. And so in Texas, in Central Texas, I still have friends that were old clients at dealerships. Whether they knew Ken from being the branch manager in Austin, or they knew me from being a branch manager up in Dallas for the first 4 years I was out of school. And that's kind of where I met the early leadership team of these were F&I guys that were at a big Chevy store, and they ended up being kind of the management team that broke off and started what eventually became Santander Consumer USA. And I feel like I was a part of that history, just being the first employee when I actually got mad one year at my bonus with Reliance, and I said, well, I quit, and then these guys were recruiting me because they were a client of ours. This was a big Chevy dealer, and I would go in there every Friday, Saturday, and I would buy paper on the spot in-house with their special finance manager. And what was a special finance manager at the time? He was usually the low man on the totem pole in the finance department, the young guy that had to deal with the customer that had credit problems and trying to get them an approval and get them in a car, right? So that gentleman ended up being a big mover and shaker in the industry. But I didn't know him when he was just very young guy out of SMU. And we did a lot of loans together. And then eventually they recruited me. I worked at the dealership for a little while too. And then we became a small finance company, got some funding from First City Financial in Waco. And then First City sold, I think, a 40% stake to Bank of Scotland. And then, again, a few years later, I left that group and went to work in the early years of Capital One Auto Finance. In fact, my first day of training at the Plano office at Capital One, they were changing the name from Summit Acceptance because Capital One had bought Summit, and they were putting the new logo up at the reception desk there at the Plano office.
Wow.
Capital One Auto. Capital One was in, whatever it was, 1996, 7. And yeah, I developed sales territory for Capital One for 8 years, and then became a trainer with their sales team. And really, Capital One was an early investor in a technology company out of New York called DealerTrack, and so they, along with Wells Fargo, Chase, I believe, AmeriCredit, several finance companies got together and said, this is a really good idea, this technology business in New York, because up until 97, 96, 98 timeframe, all the car dealers, the only way they would get a credit application submitted, to their 50 banks was through a fax machine. And so they would load up the fax machine, they would save it, and then they would dial out 50 fax numbers. And then at every bank, there was somebody pulling the paper off of the machine, processing the application, putting it in front of the buyer, the underwriter, right? And those were usually the folks that were on our team, on my team, and Ken's team in operations. And within a couple of hours, if we were good, we would fax them back an approval or a decline. on that credit application. So, DealerTrack, I mentioned them because, the way they grew is kind of a similar strategy. It was a similar strategy to what we've implemented with our technology business. Even though we're not technology guys, we're just very familiar with the problems in the industry.
Yeah.
And still the frustration, red tape, and hassle and fraud that happens. So,
yeah.
Anyway, the DealerTrack story, because Capital One had equity in DealerTrack, our sales force, we were 200 people. We went out. Actually, we were about 50 when we started, but we went out and told the dealers, look, you need to, instead of faxing, there's this thing called the internet, and you just go on the internet and then type in the credit application one time and then click the banks that you want to send it to electronically.
Yeah.
And really for 2 years, the dealers pushed back and said, I like the fax machine. It's fine. Don't worry about it. And then eventually, if you think about how much of an efficiency gain that solution provided to the banks, right? Never mind what it did for the dealers. I think it did a lot for the dealers too. But now you don't have 5 separate teams or 14 separate bank teams pulling credit applications off a fax machine.
Yeah.
It was just a game changer, right?
Of course.
But it really took for dealers to really embrace the change. One day, I don't remember what year it was, but one day we just put a warning out there that said, look, we will no longer accept fax credit applications.
Yeah.
And August 1st, no more credit apps. You got to be on DealerTrack. And so suddenly DealerTrack became a monster in the business and eventually sold. I think they did an exit of over $100 million or something. But each of those banks ended up making a ton of money being part owners in DealerTrack. So,
gotcha.
Yeah, the distribution of technology is obviously challenging, but we really believe in kind of aligning the parties that have more to gain, the most to gain from adopting this technology.
Sure.
And sometimes you got to bring them along and show them how it helps them. But yeah, dealers are we're hoping with our stuff at TurboPass, we're definitely solving big problems that dealers currently have, and certainly lenders who buy that paper can have a higher level of trust now because of the technology and the stuff that we're doing.
Definitely. Yeah. That's huge. Really cool information and a very, very interesting journey that you had there. What would you say that let me rephrase that question. What were your aspirations, I guess, initially? Did you want to have something like your dad where you were kind of on your own and you were self-employed? Because you saw him running his own. He had multiple businesses, right? I mean, he had a dealership on his own,
right? And
then he transitioned to his own finance company.
Yep.
Was that your ideal setup, or did you want to work, in corporate America?
Yeah, I did. I probably didn't know what I wanted as I was finishing school, because I studied the IB and I got a degree in Spanish as well. I thought I might want to work in and live in Spain. And I took a month and I tried it. We some of my mom's family still from lives in Spain. My grandfather was born in Galicia, and so I got a chance to dig into some of my roots there. But I found after 3 or 4 weeks living there, it was awesome. But I really missed the U.S. and kind of our lifestyle maybe more. Plus my wife was back in Texas, but so yeah, I worked enough in operations with the Reliance and Mercury experience along with my dad. But as soon as I got out into sales, where I was developing markets for those early days at Santander, the first city guys, let's call it. It was the first city funding team. I found that being in outside sales provided me a lot of freedom, a lot of time to sort of dream and be open-minded to the outside world. My brother Ken is a little bit more oriented towards operations and making sure everything runs I got a little bit entrepreneurial too when I was in sales I was 8 years at Capital One. During that time, I did some research because when I moved from Dallas to Austin in '96, we didn't have an indoor soccer facility in Austin anymore. And so I found a guy in San Diego that was a part owner in like 12 or 14 indoor soccer centers. And really with him educating me a little bit along the way, he educated me basically about how to acquire the property and what's the right what's the model for the land and the building and the equipment and the loan of how to start an indoor soccer business. I got into that not to necessarily make a lot of money, but to play, because I played in school and I played on adult team up there in Dallas. I used to drive 45 minutes to my Thursday night soccer game. It's a little bit like softball or something. When I got to Austin, I was like, how do we bring soccer? So it took me a couple years, but we built a 30,000 square foot building in Pflugerville, and it's called Austin Indoor Soccer. And my partner and the rest of his partners in the other facilities, we all kind of merged, and we became one holding company called Let's Play Sports Inc., and they're still around. And one of the great early soccer website names, we still have it. It's called letsplaysoccer.com. So if you go to letsplaysoccer.com, it's the site for Let's Play Sports, which is the largest owner of indoor soccer facilities in the USA.
Yeah.
We have one in San Antonio, actually. We merged with the second largest out of Ohio called Soccer Zone, and so now we own the Soccer Zone name and the Let's Play.
So you're still part of that right now?
I'm very, very passive with Let's Play. I was when I was making some money back in those days at Capital One, I actually lent Let's Play some, and over time I converted some of those loans to equity in Let's Play. So for about 10 years, I was on their board of directors, and eventually, I got paid back, and I haven't been on their board now for maybe 5 or 6 years, but more than that.
But you still have
keep
some
in
equity.
touch. Yeah. I get a report every year about how they're doing, and maybe someday that may become something bigger.
Sure.
Or we take it to another level, maybe, sort of like a Top Golf or some sort of entertainment kind of thing. The key in that business in indoor soccer is to own the building and own the land.
Yeah.
You really can't make the business model work if you're leasing, if you're paying triple net, and rent and everything. So that was an early lesson from Tom Higginson, the sort of the guru of indoor soccer in the US. So that was like a little side hustle I had on the side that cost me more money probably than it's made me. But it's been fun. I just became kind of a hired gun after my days at Capital One. So any big finance company that like Regions Bank that wanted to establish their lending presence in the dealer community, the new car dealers in Texas, for example, I was hired to do that, and so I did that a few times, and I just saw the industry changing from what used to be more of a relationship business, where the bank rep or the bank representative or your VP used to, because you do deals every day, right? You work with people, and you work on a portfolio over time, and you develop those relations. That ironically, dealer track and technology has sort of taken out the relationship out of the auto financing experience for dealer. Plus fair lending, right? Let's be honest. You have to treat lending in a much more objective fashion these days. And so I feel like I was also in the front row in some innovation that happened at Capital One. I'll give Steve Thibodeau some kudos. He's now the CEO at one of the big auto finance companies now. But he was the early, I would say, brains behind the operation at Capital One, and the story I have about Steve Thibodeau, I think he might have been not a PhD, but I think he had an MBA from UT. And he was this really young kid, and he stood in front of our sales group, which was, again, about 40, 50 guys, many of them car guys. We were just listening to how Capital One was going to do this car industry thing, this auto finance. And Steve showed us this thing he came up with called risk-based pricing. And he showed us a callback that that we would send back to the car dealers. And what he had was an LTV grid, or a loan to value grid.
Okay.
Across, 5 or 6 buckets, where if the loan was under 90%, right? If the customer borrowed 90% of the value of the, that's obviously a lower risk. So it deserves a lower. So maybe we would only charge 7% for that. If it was between 90 and 100, it was, 8%, et cetera, all the way to our max advance, right? Which is 120% or something. And most dealers weren't accustomed to necessarily doing it that way. But what it did for Capital One was, when we were sending out our callbacks at 9 o'clock at night, we were able to automate the callbacks based on the inputs that Capital One had. And they're super innovative in the credit side. They used to brag about, they sent more direct mail than anybody in the country. So remember the old days, Capital One was sending pre-approval letters first to everybody. And so through a lot of that, they also bought every credit record under the, in the world every month. And so they were just a data-based company that really understood risk. And so when we saw this risk-based pricing sheet in the sales group, and this really young kid that didn't, who is this guy? He's just an academic, right? And we all kind of just looked at each other and said, well, either this is like the dumbest thing ever, or the most brilliant thing I've ever seen, right? Because dealers don't have to really guess anymore. They don't have to call Mike and say, hey, Mike, can I get a $500 bump, man? I'll pay another $100 discount, right? Because we can discount the paper as the bank, and that's a little known fact. A retail installment contract can be bought at a premium, or it can be bought mostly at a discount. And that's how the banks gain more profitability, right? And so it took this relational buying out of the industry. And of course now with DealerTrack and Route One and these platforms, dealers will just click their 14 banks they think they're going to get the best call from. And really within seconds, they have a green check mark or a red X. And then they'll go to the green check mark, and whoever has the best deal gets the paper. That's probably the fairest way to do it.
Yeah.
Right. But you no longer have that relationship with the buyer over at the office. So that's a little bit of a history lesson on Capital One innovation, early days of technology in the car business. And I would say it's been a while since I think we've had a lot of innovation in the auto finance space, right?
Yeah.
There is a more direct and a more electronic experience that consumers want to have. Leave me alone kind of thing. The millennials and younger buyers don't really want to talk to anybody, so they want to kind of do things on their own. Sure. That's another reason why I think TurboPass is giving dealers a tool that allows them to get to the truth about somebody's income, employment, identity very, very quickly.
Yes.
And it's all consumer permission. They send them a text, the customer validates a couple things. For example, like their banking information, just like you would at a mortgage where you connect some things with your Wells Fargo account, and suddenly the bank has enough information to say, okay, I don't need anything else. Let's just go to the next step. And you're right.
Yeah. Compare that to the old fax machine, right?
Exactly.
Yeah, big strides there. So let's move over to the TurboPass side. So can you tell me a little bit about how that was birthed? What's the story behind how you found yourself in that role, and just kind of like where did this idea come from? I know, again, you and Ken are the co-founders, but it's my understanding that someplace in Austin, Texas, I think, was kind of the birth of a lot of this stuff. So can you share with us a little bit of that?
Sure. I think it was April of 2016 that we got an announcement at the bank that I was working at that we were being acquired by a larger bank. The CEO of that company eventually became one of our advisors, Dave Pressure, and he's another one of the early pioneers of auto finance out of California. But, as soon as I heard that announcement, I was like, and I was probably, I was almost 50. I was 49. So maybe there was like a existential moment. But I said, you know what? By Christmas, we're going to have layoffs, right? We're going to have some kind of big changes coming, and we don't need two sales organizations, et cetera. So I said, by January 1st, 2017, I'm going to go ahead and resign. I'm done. So I had to really figure out what's my next step. What am I doing? And down in way South Austin, we call next door to an HEB, there was this place called Orange Co-working. There was a new co-working space like WeWork there. And I walked in and I met this, beautiful, cheerful young lady who was the owner. And she was super, super sweet. And she just, told me the story about how they work. And I said, I think I want to work here 2 or 3 hours a week or something, have a place to work besides my home office. And so I started hanging out there for like 6 months. And I met some people, but I noticed this young lady that was there pretty much like full time. I asked Shelly, the owner, like whose office, who works out of that little desk there? And she said, oh yeah, they do like income and employment stuff for mortgages and with like Rocket Mortgage. And I had just done a refi on my house and this was literally the Super Bowl right before this. I think Rocket had just come out with their new brand, or Rocket Loans came out with Rocket Mortgage. Push button, get mortgage. Right. So I actually went through that on my smartphone, and I connected my Wells Fargo account. I was like, that's pretty cool. And I really didn't think much of it. And then someone put me in touch, or Shelly tells me that this young lady named Claire is the COO of this startup out of Athens, Georgia, that's doing like digital income and employment validation, connecting banking stuff. I'm like, you're kidding. Like, this is cool. Let me take a look at it. At first, the idea was maybe I was going to do some consulting, and I would really kind of show, or I could work for this company out of Athens and help them develop their auto channel, because they only did mortgage business. So they're a fintech, right? A financial technology company started, and they had just gotten an approval from Fannie Mae to be part of a program called Day One Certainty. And Day One Certainty was a game changer for loan originators. This is after the financial meltdown. The rules changed in mortgage. Fannie Mae became the only purchaser of asset-backed securities. Okay, so Chase can't make mortgages unless they can sell that paper to some other party, to an investor, right? And that private market, asset-backed securities dried up, and Fannie Mae's backing all these mortgages. So because Fannie makes the rules in mortgage, they came out with almost like a dealer track value proposition, like in the car business, but they went to the mortgage originators who were also stuck in the old days of how to process a mortgage, takes weeks, right? Well, the guy that got the idea to help the mortgage industry accelerate this stuff was the guy that went through the same pain that I've been through with the auto stuff.
Yeah.
He was like, look, I know this data exists at these data aggregation companies. And so he was an early pioneer in kind of aggregating banking data, and became like the first company that was approved for this Day One Certain for asset verification, which is one of the big things you got to verify for a mortgage. Yep. And I said, and as soon as I saw this asset report, I said, Jesus, this is like the holy grail of an auto finance bank or lender would want to see
Yeah.
if they were funding especially a subprime auto loan. And so I told those guys, I said, I'll work for you if I can just lead the auto division. And they were just so busy with the mortgage role that Claire, we worked it out that they gave me, me and my first developer. I basically hired a software architect who was a little bit of an older guy. He was in his 40s. He had a little bit of life experience. And I walked him through really what I needed this technology to do. And we got a connection into the company in Georgia. And we got this sandbox to kind of play in and test things. And so it really evolved into me possibly going to work for them, into really showing my brother this, Ken was finishing his relationship as a car dealer, but he was very familiar with these same problems, right? The problems that car dealers have with fraud and proving in. So as we basically came up with the idea together, and we need to offer this we need to show it to the lenders, we need to show it to the banks who we know and we used to work for, and then get some dealers to start. And so we connect, again, it's like this 3-party transaction: the car buyer, the car dealer, and the auto owner. At the same time, again, because we're older and have a little bit of experience, we thought, okay, well, we're creating sort of a business process that potentially could be patented. And so we, my brother borrowed and got leverage to the hilt and got a bunch of credit cards and stuff. And we paid for, patent attorneys and people to at least file with the patent office a theory, right? That if we can make this work and we deserve a patent, right? So that's, even though a patent will never sell us subscription for TurboPass, this retail transaction sale, retail installment sale, the car dealer, we feel that our process fits it exactly like a glove. And so we're agnostic to all auto borrowers and car dealers and auto lenders. So because of this compliance framework of the retail installment, our technology fits because it's sort of a tokenized report. It's trusted source data. So we got the data from Wells Fargo. Let's say the last 90 days of your income, I can see where you're getting a direct deposit. Yes. And if I can see a direct deposit yesterday, especially at the dealership on a Saturday night, and you're giving me a down payment check for $4,000, should I take the check and give you the car? Like, those are the decisions these guys are doing every night.
Yeah.
And so as soon as they could see this within 2 minutes of a customer connecting the information, right?
Sure.
And then they get the report, and then they see the report, and it's formatted the same every time. It looks the same, and it has a little code top. That's the TurboPass code. They just share the TurboPass code with Westlake or Capital One, and they have access to our platform. They just take the code, and it's this digital report that moves from the consumer giving permission to Ghoster, the dealer to sell and to the bank that really wants to pay the dealer quickly. Like, that's the biggest holdup and the biggest pain the dealers complain about is, like, my money, I have millions of dollars tied up in contracts and ends it. So if I sell 100 cars on a weekend, that's millions of dollars driving around, and I don't have money. I got to pay off my line of credit, my floor plan credit, right? Because I pay the taxes, but I don't have my money yet from one. So this is the pain point that the dealers really appreciate that we're helping solve for them.
Sure.
Right. And now there's no more questions about these requirements. Just like Fannie Mae, if a mortgage goes bad because of fraud or income misrepresentation, same thing could happen in a car loan. If the customer put that he makes $10,000 a month and he only makes $2,000 a month and he got a Mercedes because of this, that's fraud and that's misrepresentation. If they repo that car and they find out, the dealership has to write a check back to Capital One, right, for $30,000 or $40,000 or whatever the or they just don't buy the deal and they bounce it, and then they got to bring the customer back in and take them out of the car. It's just a lot of pain. That's a very long story of how TurboPass became what it is. With the help of our sponsor finance company, which is the largest used car one of the top 2 auto finance companies. They really liked the idea right out of the box, and because they're privately held, they said, "Yeah, we want to test it." And then we had dealers who were sending 15, 20 contracts a month to this bank, and as soon as they started using TurboPass and getting their money faster from this, they started doing 25 deals a month, 30 deals a month with that. And so now now we have these other unexpected benefits from using the tool, which from an old bank perspective, I want to get as much market share from my friend at the Toyota every Saturday. Like, how many deals did we do?
Yeah.
Well, you didn't get that deal because, Wells Fargo did a better rate. And so if I help the dealer become more assured that he's going to get his funding, his money from the bank loan, from that bank,
yeah,
then that just means more business. So it's a higher capture rate for those lenders. Not to mention the fact that they reduce risk, they're just, and they save time because those funding analysts at the bank, when they're trying to book, many times they have to look through 50, 60 pages of bank statements.
Yeah.
They all look different, and it's just, they're all like scanned copies. They can be frauded, right? Are formatted exactly the same every time. And so life is just, when a TurboPass report is aboard.
Yeah.
And that's the reputation we're starting to get.
Mike, I've got a lot more questions, but what we'll probably do is break this into a 2-part episode because we just barely kind of scratched the surface here about you and your company. I got one more question for you, just out of respect for your time for this episode, and then, like I said, we'll do a follow-up here in the real near future, and we'll talk about some other things because there's a whole lot of other directions that we can go with everything that you guys have done and are doing. But I want to leave this episode with this question. You explained how TurboPass got started. You explained a lot about what you guys are doing. Really cool, phenomenal. But what's probably the most rewarding aspect for you in your role as CEO of the company? And also, what keeps you motivated and driving the company,
Well, I mean, it hasn't been easy, and I guess it depends on when you would have asked me the question. But yeah, when we were really just getting this thing off the ground and proving the concept and rolling clients and dealers, it's really cool to see going from 0 to 1, which is the big leap, as we know, the famous Peter Thiel, 0 to 1 is the hardest. Going from 0 customers to 1 customer. If you get your first customer, you might
That's right.
have something.
Nope. I got the book sitting right over there.
Go ahead. That's hurdle, and the most exciting. We went through near-death experience with our first customer because he was very, I would say, aggressive, 4-location dealer out of Boston, Massachusetts, that was very popular with Brazilian immigrant population. They sell a lot of cars to a lot of Brazilian folks. They were using TurboPass a lot, and they were funding deals. Same story, that I was mentioning to that bank. But when we started sending invoices to this dealer, we were getting paid, and it was weeks. It was 2 or 3 weeks, and we finally came to a point. We said, "Look, we can't prove that we have a business unless these guys pay for it." So and we weren't even charging that much. I think maybe they owed us for 3 months. It was like $300 or $400 a month, right? So they were behind $1,200, and we warned them. We said, "We've got to turn off the platform if we don't get paid." So we turned it, and within the app, their main finance and sales manager called and said, "I'm driving across town. I'm going to talk to the owner." He hadn't even talked to the owner. I'm going to talk to the because and we'll get you paid. And he explained to the owner what he did. He said, look, I've been testing this for 3 months, 4 months with these guys, and the amount of time and money that we've saved, plus they've made us a bunch of car deals. Like now this dealership starts with TurboPass at the front end of their sales process. So he went and the owner and said, look, I need you to just pay this invoice. So we got paid. We proved that there's plenty of value in the so those are that were exciting during those times. And then we would be at trade shows and, going in front of panels like fraud panels and listening to other experts and kind of fitting into that crowd. So now that we have a little bit more stability, we've got a little bit of funding, we have good enough recurring revenue that, there have been other investors that have come in and said, hey, we like what you're doing. We'd like you to grow and take this to a whole nother level from a couple thousand dealers to 5,000, 10,000, 15,000 car dealers. There's over 40,000 dealers in America, and that's just in automotive. The growth of the team, I'm starting to get more independent with our own product development is important because we weren't, experts, and we did some outsourcing of that for a while, and really our first app developer that actually built our minimum viable product, our MVP, is back with the company, and he's now the head of our engineering shop. I think that's a cool story, and he has equity in the company because he was an early player and influenced the product. And that was, again, another guy I met at Orange Co-working, which unfortunately, rest in peace, is no longer, the company is no longer. I wonder what would have happened if I hadn't decided to pull in to Orange Co-working to say hello.
Yeah,
because that really, it changed my life and the whole trajectory of the business, and both our families, my brother and my family's lives. So that was, and so yeah, having a real business development head, like a chief revenue officer. We have a CTO, and then in San Antonio we have, as we have a small team there. So we're up to 13, 14 employees, and that's kind of cool, but also stressful. That you're in charge of a bunch of folks where their
livelihood, really, yeah,
exactly. And we've gotten health insurance for the company now, and we're starting to act like a real company. But yeah, it is harder to be stuck doing 14 Zoom calls every. And so I still enjoy going out and getting in front of trade organizations, getting in front of the auto lending industry and mingling with them. We've done a few trade shows and had small booth presence, but I don't think we're quite there yet. I think maybe 2024 will be. We will have a small booth at NADA and some other auto finance conference as we get a little bit bigger. But yeah, the podcasts are also cool. I've been on a couple. I learned develop a podcast too during that time, and created a small podcast. I think I recorded maybe 9 episodes of Silver Founders podcast. Older founders that have started a kind of a risky operation, but I think there is some data, recent proof that older founders have a slightly higher success rate than maybe the 20-somethings that have dreams in their eyes of being the next Google. I think if you focus on solving real problems for real customers,
right,
you have a chance to build a business.
That's right.
So that's what's exciting.
That's
especially as an empty nester now, and having one kid about to be married and one finishing college. So.
Gotcha. Yeah. Very different life and different world that you're involved in now these days.
Yeah, totally different.
That's fantastic, Mike. You've shared a lot of cool stuff, and I really appreciate all the backstory. I for one have really enjoyed learning more about your experiences, especially in those early days, and especially the things. I think one of my takeaways is I think I might have to have your dad on, because something tells me he's got some stuff to share.
There could be. We could possibly arrange that. He wouldn't necessarily know what to do with a podcast, but he could. He definitely has some sight issues now. He's blind in one eye and 50% in the other eye. So we could just say, hey, talk that way to the camera.
Yeah.
So maybe we can ask him about the old days.
Yeah. I think that would be a really interesting approach, even if it's just, a short conversation. I'm sure he's got incredible stories and incredible things to share as well. But most of all, I really like to hear about how, all of his risk taking and his innovation really birthed something in you guys. That it didn't happen overnight. Like I said, at the beginning, 32-year, industry veteran here.
I wrote that bio like 5 years ago, by the way. So I think it's more like 37, 30.
Wow. Okay. Even more so driving that point home, right? It's been a long journey. And like I said, the other thing I mentioned at the beginning, a lot of people kind of see more so all the rewards and all of the benefits at the end of it. They don't see the whole picture and what people really had to go through to get. And so that's why I love doing interviews like this. We can pull some of that stuff out. We can talk a little bit, and like I said, we didn't really get to even get that far. On part 2, I want to go a little bit more into maybe some setbacks, some of the more difficult things you had to overcome, because that really is motivating for everyone that's, out there trying to do something. We have to, we have to hear about, we only hear about the good stuff. We need to also hear about the bad stuff too, because it's not all fun and games, Yeah. So
absolutely, there's a lot of risk and a lot of setbacks that both Ken and I went through to sort of learn these lessons the hard way,
Yeah, for sure. But you guys have an amazing support system. You both have amazing spouses. You have amazing kids and families that are helping in various different ways. And then, of course, and I know a few of them myself, you have an amazing staff. You guys are very blessed. You guys are very fortunate that you have such quality people that are riding with, and you have made some tremendous strides, and I think in a very short period of time. And more importantly, I think the future is just for the taking. There's just so much that you guys haven't even really gotten into all the areas that TurboPass can really go. And so again, we'll talk about that more on the next episode just out of the sake of time consideration.
Sure.
But there's a lot more that we can unpack here. But today has been awesome. Thank you for your time. Thank you for all that you share.
Thank you, Marco. Look forward to seeing you again. And love the Oilers throwback hat.
Absolutely. Appreciate you, buddy. All right. Well, we will talk to you soon. And that does it for another episode of Business Innovators Radio. We will catch you here next.
Thanks.
Thanks for listening to Business Innovators Podcast with Marco Salinas. To hear all episodes featuring leading industry innovators and trendsetters, visit us online at businessinnovatorsradio.com today.